All right, let's get started. So welcome again to the StashAway 101 webinar. As I said, this webinar is perfectly for anyone who are interested to know more about digital wealth management space and also StashAway as a leading online investment platform. So this is the agenda today. So first, for anyone who doesn't know much about StashAway yet, we'll give you an introduction of StashAway. And you might wonder, what's the difference between StashAway and traditional investment platforms? And then we will also explain a little bit about our unique investment framework called ERAA and our flagship portfolio. At the end of this section, we will also give you a short application demo. If you're a new client, it will be a perfect session to know how to use our user-friendly app by creating a portfolio, making deposits, and also create transfers, inter-portfolio transfers. Okay, so StashAway, we are a digital wealth management platform. So the portfolios that we provide traditionally was only available to usually private bank clients, those discretionary portfolios. Leveraging technology, we are able to provide personalized and curated investment portfolios and also cash management solutions for our client in a very simple, cost-efficient, and intelligent way. All our portfolios are all available with our app. So if we are a mobile-first digital wealth management platform. So StashAway, we started in 2016. We're the only regional digital wealth manager with licenses and full operations across 5 markets in Asia Pacific. Now this webinar is for Hong Kong clients, but we started in Singapore. Later, we also expand to Hong Kong, Thailand, Malaysia, and also Dubai. So we are a Series D startup backed by renowned investors such as Sequoia, Eight Rose Venture, which is part of Fidelity, Hamilton Lane, etc. So in each of the market that we operate, we are regulated by the local regulators. So we got licenses in Hong Kong, SFC licenses 149, and in Singapore, we are regulated by the MAS. Very often when clients start to investing with a startup platform, they might wonder, are my assets safe? I think clients can be rest assured that your assets are under the custodian of the leading banks. In Hong Kong, your assets are under the custodian of Citibank and HSBC. So over the years, we have more than 100,000 of active customers now, and we are managing billions of US dollars of assets of our clients. And in the same time, as a leading digital wealth management platform, we are recognized by leading international and local media such as Financial Times and and Bloomberg, and also local medias in Hong Kong. In Hong Kong, Johnson is our company's advisor. Because he became the advisor of our company because our philosophy is very much aligned. We want to become your personal financial secretary. So that's why through technology, we make our investments simple, intelligent, and there's no minimum. So you can start with any amount to invest in a cost-efficient and secure way. Very often, the first question when I talk to clients, they ask me, what's the difference between StashAway and other platforms? So to illustrate it in a clear way, I usually categorize the platforms available in the market in 3 categories. They are banks, brokers, right? And also wealth management platforms like StashAway. In the older days, people call it robo-advisor, but now, robo-advisor is not purely robo. There is also human elements there. So let's say it's some wealth management platforms. So there are 3 categories. In terms of investment product offerings, in banks, you got usually it's different mutual funds and structured products. They can for the private banks, they can customize structured products for you. And for a brokerage platform, they usually it's single stocks and mutual funds available as well. But the unique thing about digital wealth management platform like StashAway is that we provided curated investment portfolios for our clients, for broad-based clients. And we also got alternatives available. And in terms of the product, usually for banks, what they offer is managed by third-party asset managers. So they're in the role of the distributor. And for brokerage company, usually you trade on your own. So it relies on your own discretion to trade different stocks, for example. While for StashAway, our product is especially our flagship products are managed by our algorithm and our CIO team. So if you're not such an experienced investor, if you want advisory and also algorithm data driven approach in managing the portfolio, using StashAway could be a suitable option for you. And in terms of advisory, of course, brokerage you trade on their own, so there's none. And in the banks, yes, there are relationship managers and advisors, but it depends. Some banks, they are commission-based. While for platforms like StashAway, the advisory part, we don't receive any commission. We don't receive any rebates from our partners, such as those fund companies. So in app, it's very transparent. You can see all the details and the underlyings of each portfolios. And if you want human help, there is also wealth advisors available to you. In terms of the fees, actually, if you are you buy and sell, you're a trader. So the brokerage you buy is charged per transaction, right? So for brokerage platforms, they have the incentive to turn you to trade more. For banks, there are various types of fees, like subscription fee, management fee, redemption fee, etc. So usually for banks, it's more expensive. While for StashAway, we want to make it simplified. I want to make it cost efficient. So the fee is ranging between 0.2% to 0.8%. So in general, I can't say that we are the cheapest one, but I think our fees are very transparent and also cost efficient compared to many platforms now available in the market. So in terms of the products, we have a comprehensive product suite for you to choose. It's comprehensive, but yet I think it's still simple and easy to choose from. If you see from the left, we often start from cash management, the lowest cash management, to alternatives. So the range is quite broad. So for new clients, usually if you're a risk conservative, risk-averse client, so probably you start with some cash management option, leveraging now currently still the relatively higher interest rate environment in the market. So USD cash yield may be something that you're looking for. But for long-term investment, most of our clients would choose the general investing as their core portfolio. There's also our flagship portfolios providing different risk levels and allocations that is tailored to the client's risk tolerance. So the general investing portfolios, you can also choose the ones managed by StashAway CIO team and also managed by our partner, BlackRock. In the meantime, if you are a more experienced investor, you don't want just discretionary portfolio, you can choose to build a flexible portfolio, basically build a portfolio from scratch at your own discretion. Moving forward, if you want something thematic investing, there are also 4 different themes available in the market. So these portfolios are more on betting on some of the mega trends in the future. Lastly, in terms of alternatives, we have started offering alternatives investment and private market investments in where we started in Singapore for a long time. And last year in Hong Kong, we launched the alternative private market investments in the market last year, and the feedback has been great. So these products are only available to professionals investors in Hong Kong. So at the moment, in Hong Kong, we focus on semi-liquid private market investments, including private credit, private equity, and private infrastructure. And rest assured that when we do our own due diligence and product selection, we always put our clients' interests first. So overall, in terms of no matter it's the public investment or the private investments in the market, I think what we offer could be one of the most cost-efficient one in the market. So yes, like I said, though it's cost efficient, the asset allocation is at institutional level, and our share class that we underlying the different portfolios are also at the institutional level. So what we believe that is that for the ETF investment, we use a data-driven approach instead of pure human judgment. And that's why by leveraging the lower cost ETF, we are able to achieve the result, help our clients capture the market's growth, because if you look into the US, even if you use a more active approach in management, especially for US large cap stocks, 90% of the fund managers cannot beat the market. So we think that for the clients to capture the beta of the market the best, could be using lower cost ETF to build institutional level asset allocation. So this is a simple illustration of our investment framework called ERAA. So ERAA is our proprietary framework and also our underlying our proprietary algorithm to help us to make investment decisions. In a easier way to illustrate, so in ERAA, we categorize the economy by four economic regime, primarily looking at inflation and also the growth of the market. So the four regimes are, of course, the good days, inflationary growth, stagflation, and recession. So if you look back a few years ago, before US raised the interest rate, and in between, we actually in a time of stagflation, where the growth is low and the inflation is high. And that's why US keep raising interest rates in the past 2 years ago. So at that time, when in a stagflation environment, you want to be defensive. So during a defensive time, we will, depending on the situation, we will allocate more to defensive assets such as bonds and treasuries and lower on equity. However, as a move, we now we are in an inflationary growth environment where inflation is still not back to the 2% level. But the market has actually been quite strong for the past year or two. So we've become moderately aggressive, allocating more to equity. But we also play defensive as well, as we also put gold in our portfolio, which has been an outperforming assets for the last 2 years. So general investing, as I said, is our flagship portfolio that offer globally diversified multi-asset ETFs as an underlying. You can choose up to 12 different risk level that is tailored to your risk tolerance, unlike the traditional conservative, balanced, and aggressive. Actually, we use a more statistical approach to let you know clearly that which risk level is suitable for you. And it's institutional level, and we also do auto rebalancing and re-optimization for you, so that you actually don't need to think about when should I buy and when should I sell, so that you don't really need to time the market. Because to us, time in the market and consistent investment using a dollar cost averaging approach is much more important than timing the market. And here is some examples of the performance of our general investing portfolio. You can see there's wording like SRI 16%, 22%, and 36%. What does this percentage mean? So we use a statistical approach to calculate the risk for our clients. So for example, 16% is that under 99% of the scenarios in the market that your investment won't lose beyond 16%. So this is relatively is like under 99% of the case, you won't lose that much. So this is relatively a more conservative investment portfolio, while 22% can be translated into balanced portfolio and 36% can be translated into aggressive portfolio. So if you look into the exposure by asset classes, most of the you can see the conservative one and the balanced one, they are quite diversified across equities in the world and also different bonds, including corporate and government bonds. And gold remain a critical part in our asset allocation. While for the more aggressive one, equities will take bigger shares of the total portfolio allocation. And in terms of geographical exposure, I'll say that the conservative one and balanced one, compared to other fund managers, we at the moment we allocate slightly less, have a strategic tilt slightly less to the US versus the aggressive portfolio remain a neutral allocation to the US. The reason sometimes our clients ask me why the allocation is so US heavy. But the clients also need to know that the US capital market represents 50 to 60% of the global capital markets. So actually having around 50% to 60% of allocation to the US is just a fair market representation. And in terms of performance, that's usually what investors care us a lot about. Is so in 2024, we have achieved great performance across all three portfolios. And the same trend continue in 2025, where as you can see, for a conservative and balanced portfolio, the 2025 year-to-date return is already higher than the full year return of 2024. And for the aggressive portfolio, for the half a year, we are not too far away from the full year return of 2024. So I'll say this continues to prove that the market goes up and down, but it continues to prove the importance of stay invested in the market. We have been doing quite well in the past 3 years, despite the market volatility. And for clients, if you at the moment you don't want to get into investment portfolios that soon, usually what you can do is to put money in this US dollar cash yield portfolio where it gives you 4.3% per year yield to maturity as of now. But of course, I think clients' money cannot stay in cash forever. You should still consider start taking some calculated risks soon to achieve your investment goal. But for now, before the US Fed cut rates, this is the yield to maturity percentage. And in terms of our fees, we've been very transparent about our fees. So for most of the investment, we use this tiering system to calculate the fee for our clients that range from 0.2 to 0.8%. Of course, the more that you invest, the lower the fee percentage it is. But for other portfolios, such as single ETF portfolio or our USD cash yield portfolio, it charges a lower management fee. This is also for the benefit of the client. And for private investments, as StashAway as a platform, we charge 0.5% of the platform fee, which is also one of the most cost-efficient platform in the market for offering private investments. Okay, so just now we have go through StashAway as a platform. our investment philosophy and framework, and also some of the details of the example performance and our fee structure. Next, I'll give you a simple, like a short app demo of how to start using our app. If you have already registered as a client but still not yet start invested, this would be a good opportunity to watch. The app demonstration would be 5 minutes, a short one to tell you how to create a portfolio, how to make a deposit, and most importantly, how to apply the promotions at the moment. If you register as a new client at the moment, it's quite beneficial to you. I will talk about it in a bit. Please give me 2 minutes to set up the demo. Okay, so I'll use this test account to give you a demonstration of how to start use the app. So when you finish opening an account, when you click into the app, this would be the home page that you see. So in the home page, as a new client, of course, you won't see there are some existing portfolio in this test account, but if you're a new client, there won't be any. So the first thing that you need to do is to create a portfolio. So on the top of this page, you can see there is a few buttons, deposit, create, etc. So you click on create. And you can first, as a new client, you can start exploring the different portfolios of StashAway. So you can see in our portfolio, we categorize them into core, cash management, custom, thematics, and also private markets. So let's say in the core is under the core is the general investing portfolio that I've mentioned before. So in this demo, let's set up a general investing portfolio. When I click on it, I continue to click explore. So in the sliding bar, you can choose the risk level that is right to you. So like I said, our statistical risk level range from 6.5% to 36%. So as you slide to the right, the risk level increase. So let's say 20% as an example. So we will show you let's take 36% as we just talked about the 36%. Okay. So as you see, we're very transparent that we will show you the analyzed return of the past 5 years and since its inception. And we will also provide quarterly returns for you so that you can see the distribution of gain and loss, and also the cumulative return graph. So before you invest in it, you can actually make an informed decision. And of course, here we also show you the asset class allocation. This is quite an aggressive portfolio, so higher allocation to equity. And we'll also show you the geographical allocation as well. If you check all the message, when there is no problem, you continue here you can choose to give your portfolio a name. For me, let's say my goal is retirement. So I'll pick this name for it. If this is a new portfolio, it will automatically prompt you the next step to prompt you to make a deposit to your portfolio. So here you can click manual deposit, um, set up a new deposit plan. For making deposit, you can do one-time deposit or monthly deposit to set up a standing instruction in your bank. For the demonstration here, let's select one-time deposit. We accept both Hong Kong dollar and US dollar. So here, for example, I have multiple portfolios, but here you can find the retirement portfolio that you just set up. And let's say I want to put 10K USD as an initial investment. Review. Yes, I did correctly input 10K in the retirement portfolio, so I confirm. In the last page of the deposit, we will show you the funding instructions on this page. You can find the account number, etc., to make your deposit. And remember, each client will have a unique user reference code in StashAway. So remember, when you make the bank transfer, include this code so that we can automatically match your money to your desired portfolio. Okay, that's it. After you make the deposit, it will take 1 to 2 business days for us to receive your money and also help you invest in this certain portfolio. Moreover, last just mention, never to omit the free line bars on the top left because you can enter promotions here. So now we are running a marketing campaign. So now you can input promotion called All Good here. So if you apply, you're a new client, you can get $500, Hong Kong dollars of trip.com voucher as a new client. But you also need to start invested before August the 29th to get that promotion. All right, this is the short ad demo that I've mentioned. And here, yes, the promotion, all good. So you just need to input this promo code to the promotions tab in our app, and then you got 3 months of free investing for an amount up to 30 to I think it's more than 300,000 Hong Kong dollars for 3 months of more than 300,000 Hong Kong dollars AUM for 3 months, and the 500 trip.com vouchers. We're running out of time. So if you have questions, you can put in the Q&A. And but if not, you feel free to contact our customer service team to ask any questions. And after this webinar, we will also send out follow-up emails to just record down the promotion campaigns now it's available to you and provide you a free consulting session. Okay. That's all for today's webinar. I hope after today's webinar, you'll understand more about StashAway as a platform, give you psychological safety, and also understand more about our investment portfolio. Hopefully that's informed enough for you to start your investment journey with us. Thank you. I see one question. Can we transfer from overseas bank account to StashAway here in Hong Kong? Unfortunately, the answer is no, because at the moment we only accept local bank account that put direct transfer to StashAway. Yeah, this is more like a local regulatory and anti-money laundering regulation. So unfortunately, at the moment, we cannot accept bank transfer from overseas bank account. It must be from your local Hong Kong bank account with your own name. I'll stay here for a few more minutes to see if there are any further questions. But if not, you can also feel free to drop the line in this webinar. I'll hopefully see you in our future events. Okay, seems we don't have further. Oh yeah, I received another question. So this question is after 3 months, you have charged to use a platform. Oh yes, because like I said, we're a digital wealth management platform, so we charge one single platform management fee to our clients. So the promotion is for 3 months of free AUM fee management fee waiver for up to I think it's 325,000 Hong Kong dollar. So after the 3 months, your money invested with us would need to pay the platform management fee. Yeah, but I think, of course, we are a profit-making business, but of course, there are fee associated. But I think our fee is simple. There is only one, so that you don't need to worry about whether or not it will be mischarged by a lot of different kind of fees, like subscription fee, management fee, redemption fees, portfolio switching fee, etc. We don't have all those, right? We only have the one. Platform management fee that I've mentioned earlier, depending on the amount that you invest with us. Let's wait so 2 more minutes, and then we can answer one final questions if anyone has one. Okay, if you at the moment, if there's not any further questions online, remember you can always feel free to contact our customer service team to ask any questions that you may have. We'll try our best to address your questions and your concerns. Thank you for joining the webinar today. I hope you find the session helpful. Thank you.